大家好，我是 Joyce， 欢迎来到澳星金融。上一期我们和大家谈到了在房地产开发的过程中，金融机构可以给开发商们提供哪些不同类型的抵押贷款。其实单单澳星每周都会收到数以百计的贷款申请，如何筛选和评估这些贷款申请，我们有着严格的风控标准。而作为投资人，如何判断自己在地产抵押贷款项目的投资是否安全呢？今天我们就邀请到澳星金融的首席合规官、澳大利亚土地经济学家 Paul 和我们来谈一谈投资安全性的话题。Hello Paul, how are you?
Very well, Joyce, thanks.
That's good. Thank you very much for being here today. Paul, I know that you have nearly 40 years of experience in finance and fund management. You are the professor in teaching Master of Property Development in university, and you have done years and years of research and study in risk management. So in terms of risk control in property lending, I think you are the best expert I should speak with. So Paul, in the last 2 years, when I communicated with my investor, the most frequent question that I've been asked is like, Joyce, is this mortgage loan project safe enough for me to invest in? While you're here today, I think all the investors would like to hear what your answer is.
Always nice to talk to you, Joyce. There are a lot of reasons why Austar's loan products compare favorably with other investment opportunities. Let's start with just two. The first issue is volatility. Property is much less volatile than other asset classes. Volatility means that the price goes up and down a lot. If you look at this graph of stock market activity from the 1st of January this year till now, you'll see a lot of volatility, and volatility represents risk. The corresponding graph for property is pretty much a straight line. The second issue is priority. If you buy property directly, then you're in the first loss position. What I mean by that is that if the property market drops, then who loses money? Let's compare the position of a direct property investor, say someone who buys an investment property, with an investor in an Austar loan by looking at the capital stack. We'll begin with a $1 million property and an investment of $350,000 in both cases. Let's assume you have $350,000 equity in your investment property and a loan of $650,000. Your equity is at the top of the capital stack in the first loss position. We'll compare that with an Austar investor. They also have an investment of $350,000, but they're not at the top of the capital stack. The borrower is in the first loss position at the top of the stack. Now let's consider what happens when the property market drops by, say, 10%. In the case of the direct property investor, the loss of $100,000 comes directly off the top of the capital stack and out of the pocket of the direct property investor. That's a loss of about 28%. In the case of the Austar investor, the value of the underlying asset has dropped the same 10%, but the loss is suffered by the borrower at the top of the capital stack. The Austar investor has not suffered a loss. As a matter of fact, the Austar investors continue to earn interest on their investment. This example illustrates the use of the loan-to-value ratio to show how our investors are protected in bridging loans. Construction loans are different to bridging loans because the process of building the project adds value to our security. We start with land and construction materials, but by the end of the project, we have a completed building with a value that's higher than the sum of the value of the land and the cost of all the construction materials. Let's go back to our capital stack diagram to see how that works. We start with our same $1 million project, but this time the end value of the project is now $1.2 million. If the property market drops 10%, then we still have a safety margin of $430,000 to protect us. In the case of a construction loan, the size of the safety margin is much more important than the loan-to-value ratio because it takes into account the size of the profit in the construction project. If their profit was 30%, then our safety margin would be $650,000. You can see that the loan-to-value ratio doesn't tell the whole story for construction loans, which is why, at Austar, we look at the safety margin too. As a matter of fact, we take the safety margin to a whole nother level, but I'll need a bit more time to explain that. Maybe another day.
Thank you very much for sharing all the information and knowledge about the safety margin with us today, Paul. Now let's move on to a very popular topic that recently published on an Australian newspaper. It says due to the COVID-19 pandemic, Australia will face the worst economic recession since 1930. Australian house prices, led by Sydney, will drop up to 30%. How do you think about this, Paul?
That's a big question, Joyce. Let's deal with it one part at a time. This graph shows the levels of gross government debt when compared to the GDP of the economy. I've selected Canada as a comparable economy to Australia because it's also a resource-based economy with a similar standard of living. I've then put on our major trading partners of Japan, the United States, China, and the European Union. Now, as you can see, Australia, the green line, is close to the bottom of the indebtedness levels. For example, the United States has debts of around 140% of GDP, while Australia started the crisis with only around 40% of GDP in debt. That means we can afford to support our people, and we won't have such a hard time repaying debt as many other countries will. The current crisis is still very serious. On this graph, the solid blue line shows the International Money Fund's estimates that they made in April about how advanced economies are going to grow over the next year or so. We could see a temporary drop of about 10% of GDP, with a recovery over the next 12 months taking us back to the point that we started at. If you compare this to the dotted blue line, which was the forecasts that the IMF did in January of this year, you can see the difference that the virus has made in just a few short months. One of the main reasons I think Australia is going to do better than many other countries is because Australia put a serious safety net in place to protect people's jobs. Australia's stimulus is almost 11% of GDP and is designed to keep people connected to their employer. Even though the United States is spending almost 10% of GDP in their stimulus, much of their stimulus is being paid to companies, not to individuals. So, since a large part of the economy is dependent upon the consumer and consumer confidence, I believe the Australian stimulus is going to be more effective than the American stimulus. Another important factor is the extent to which the virus has spread in different countries. The United States has 218 deaths per million population. European countries like France have 391, Germany 83, Italy 485. In Australia, we only have 4 deaths per million population. Our export industries like coal, iron ore, and natural gas have continued through the lockdown. So has construction. This means that Australia can get back to work earlier and with much less damage to its economy. I don't expect to see much immediate impact on property prices because property markets lag other markets. In 3 or 4 months, we might begin to see some impact on property markets and prices. If you look at the fundamentals of supply and demand, almost all of our residential markets are in pretty good shape. There's a few inner city areas where there's unsold apartments, but activity in the growth corridors of northwest and southwest Sydney remains strong. Prices haven't dropped, even though sales rates have slowed considerably. Interest rates remain low, which is helping affordability, but affordability is still at historically difficult levels, and we're not sure what's going to happen with migration. In summary, I don't think we're going to see drops of much more than about 10% in property prices, and even then, it'll be high-end suburbs that are worst affected. Low-end suburbs will probably be stable or have small increases in prices. Thanks, Joyce.
Thank you very much again for joining us today, Paul. Thank you. 好的，那我们今天的节目就到这里结束了。我们的视频内容将会同步在公众号里，如果大家有任何问题的话，也欢迎您在留言区留言。谢谢，我们下期再见。